Hello, good evening. Oh, sorry. Welcome to today's lecture on boom and crash trading. Just a beginner version. So let me share my screen. All right. So before we get started, I want you to know that this is an area that has to do with binary. So when we talk about binary, on the other hand, we're looking at what is not generally controlled by the world markets or whatever you might think, like financial markets. It is what has to be affected by majorly the news and other things, factors that makes the market move. But when we come to to binary, here is just a synthetic form of trading. Their assets, when we talk of assets, their pairs and all of those ones not majorly moved by either the news or what happens. It's just a system that is being manipulated either to go up or come down. So just know that it's a synthetic form of what? It's a synthetic platform that could be manipulated at any point. So I don't know whether manipulation is the right word, but I'm not actually talking of um, market changing direction and people lost the money or that one. But I mean, it's a market that is being decided by, let's say, it could be the broker and how the market should behave. So that is on the aspect of whoever are in charge of the market. But when you talk about financial market, there are a lot of factors to consider. It has to do with a big factor, but this is just not where we're going to. But when we talk of binary, we mean a system that is being controlled by certain kind of people. So they make decision how the market could be. Okay, it's like talking of a virtual um, form of trading. So let me use that word. So that's just it. So now we're going to look at boom and crash. So in case you don't know the broker that one can find boom and crash, Deriv is a broker, is a binary broker that's in charge or that give us the access to trade the following pairs while they are indices. So just a beginner video. Um, we're looking at boom and crash. Well, after my explanation, we'll jump right straight to our MT5 app. And what you need to know, this particular platform works with MT5. It works with MT5, not MT4. So before you can have access to this pair, you have to create an account, a derivative account. After creating an account, I think you can I recommend you go to my previous video and watch my previous video. You're going to get how you can open a derivative account and how you can also set up your MT5. So let's jump right real quick without waste of time. So boom and crash. So we're going to look at what boom is and what crash is. So for example, as we are going to go to our app, we are going to under those quotes where we have the different assets we are trading on, the different markets we're going to trade on. For example, if we're looking at the boom market, we want to trade the boom market right now. We have according to the strength of the pair. So we have one is higher than the other one. That is by their lot sizes. So we have boom 500. This is lower than boom 1000. So you have this pair boom You have boom 1000 and you have what? Boom 500. So how do I mean by this? Two of them, the minimum lot size one can trade is 0.20. But the way this is going to move and the profit within a short time this will give you is giving you times this percentage you are seeing here. This is 1000, this is 500. So suppose this is giving you point one. This is giving you points. It will be giving you two of this. Let's say we have 0 point by move 0.1. If this one move once, but when we're trading boom 1000, this might give us 0.22 or 0.25. That means this is higher than, in terms of the strength, and also the lot size is higher than the other pair. So we have the boom family where we have boom 500 and we have boom 1000. So we are going to find out what they really do. The next is under the crash family, or the when we're trading the crash markets, we also have crash 500, and we have crash 1000. All these are assets, or we call them pairs, or sometimes I call it market, because you might decide to trade crash 500 and you don't want to trade crash 1000. Depends on what you think the market, which one you're used to. So that's just it. So normally you're not supposed to trade all of them. So you're supposed to know which one you're used to, or you're conversant, and you are mostly going to trade on. So that is just it. So now let's get started. Let's focus. Now the word boom, how the market goes, the boom market, is that we use this, we look at this as a market where we are expecting the market to buy. You getting my point? So we're expecting the market to always move upwards. It's always moving upwards. So that's what the boom is. So how it moves upwards, it doesn't it doesn't move like normal market. For example, uh, it doesn't move. Let me split my screen. It doesn't move like this kind of pair you see. Let's check this to the 1 hour or 30 minutes time frame. It doesn't. The market does not move like you get the candle. Good. Or let me drop it to a more something a bit clearer, so you get it. Okay, you can see that. You can see how this is dropping, and if it's a buy, it will see how the candle will be pushing upwards. So, but um, this boom and crash. Let me go to. Let me open boom and crash. For example, this boom 1000. For example, this boom 1000. For example, good. So this is how the market looks like. You're going to have you're going to have a move. You're going to have a move downward until it hits where the market needs to be triggered. So we call this spike. It spikes up one time. So perhaps it comes back to this zone where it gave you this long spike. If that is a support, remember, for a market to generally buy, that means the market must have a support around that zone That is why you are going to have a bullish move. So the way this market moves is like something jumping. If it if it moves in form of this drop of this red, dropping, ticking 1 seconds, the next seconds, and then when it hits a point where you are going to get spike, it's going to shoot up like a rocket. So if it do all this number of drops, like it's dropping like this, when it hits a very major area where there's a support, this is the form it buys. The market buys in form of a spike. That means it spikes itself, it shoots up. So if you now place a sell here, for example, and then the market moves ahead of you like this, that becomes a problem because you are going to currently have a red on your account. So how we trade the market is that I'm going to set up indicator to help us um, dictate when we are supposed to get the market spiking and when we are supposed to do the opposite, like place a sell, because it's not always going to be moving up. It will hit a resistance. So for you to trade boom and crash, you just need a basic key knowledge, just support and resistance, and maybe trend line. You just need that. Basically, it works like the normal form of trading where you buy and sell. But the only thing is, whenever you are trading boom, is that you are only looking for one opportunity to sell the market only when you think the market is at resistance. You don't sell the market at you don't sell it when it's at the bottom. When it's at the down part of the chart like this, you don't sell it. Sorry, I'm using 5 minutes, but let's switch to 30 minutes and let's see. I want to show you something. All right, so this is just it. For example, if I want to buy this pair because I'm supposed to buy it, but I may likely wait for the market to get to this zone where we get a support. This is mostly a strong zone where we saw that the market was buying. So this is where we may likely be anticipating a good buy from here because right now the market did hit um resistance somewhere. So we can see that the market is going down. So while we're having the market giving you some little spike here is because we have some small support around here. So remember, we only buy this pair because the pair is always to give us spike. Look at how it spiked. Look at how it spiked. Look at how it spiked. That is how it moves. The market move in form of spike. If it gets here and it's supposed to spike, you are going to see a very long candle will just shoot up. Unconsciously, you won't know. But right now it's selling. But if we want to trade the pair in the right direction of catching spike, then we may need probably to wait for the market to settle around this region where we're having looks like a major key support area. You can see this looks like a major key support area. So we might allow the markets to retrace up to this extent, and then we now write our buy here. So how you're going to do, you open a buy. If you are very sure that you are going to get spikes around here, you open a buy, leave it there for a few minutes, and then the market is going to shoot up as it's doing that. That is how it does. So perhaps I need to drop this to the 1 minute time frame so you can see clearly. So excuse me, let my chart load. Good. You can see how powerful this spike is. After the market did retrace from a very long position and it got to where there was a strong support, you could see how only one spike can make your heart jump. So this is how you trade it. If we want to cash spike, we will always target the support zone, and then once we know that we are going to get spike there, we open a buy. That is how the market we the more it is spiking, the more we are in profit. Anytime it stops spiking and is coming with this sell like this red is a sell, we know that our profit will be reducing, but not until it gets to where we open the trade. That's what I'm referring to. If it gets here and then it we did not close and then the market refused to spike, it keeps moving downward, then we are going to be out of profit. So that is how we trade it. So we have boom 1000 and we have boom 500. So this is um the next. I'm using trading view. So if you are using PC or laptop to do this, what you need to do is just to go to Google, just type um, trading view on Google, trading view binary implementation, by trading view binary implementation.com. That is where you are going to get most of these pairs. So just go to tradingview.binary.com or trading view implementation for binary. Just type on Google, it's going to take you to this page. And then what next are you going to see here? We can now see those different assets I'm looking at. So over here will always be where you type the pair you want to trade. If it's boom 500, I will type there boom 500 without space, and I will hit enter. But if I don't know the pair, for example, I can just write B there. And when I write B, you can see um, outside the other pairs that are showing. These are the ones DRIF offer. For example, I want to look for VIX pair. I'll just type VIX. Sorry, I'll just type volatility. So all the volatility I have on DRIF, we have volatility 10, 1S, volatility 10, whatever it is, 75. So once I just type volatility before I finish it, it's going to give me a different one. So suppose I want to trade step index, I'll just type ST, sorry, ST there. So this is step index, and that is it. All right, so guys, you can see this is one spike here on boom 500 because of what it's at a support zone, so you can get this. You're seeing the spike on the 1 minute time frame. So um more often you may not discover the spike on other time frame unless it is a major buy trend from the higher time frame. So for a practice section, you're mostly going to be practicing with the 1 minute. Then later on, you now change to the higher time frame, like the 4 hour. You can see if I change this to the 4 hour, you can see this was a full spike or full buy for Boom 500 when the market was around here. So with this kind of position, one can hold the market. If I'm using the higher time frame to take the trade, so you can see that one can't do what? One can hold this position for long because the time frame is on a higher time frame. But if I'm using 1 minute, then I have to be careful not to um I have to be careful that if I place my trade and I get spike, putting me in profit, I'll be careful so that the next spike, if it's not spiking more, I'll be careful that I don't get these red ticks. this drop doesn't come back to where I am, because if it comes back, I'll be out of profit. So, okay, guys, let me switch. I stop there. I'll stop there. I told you I was just going to show you an illustration. All right, so I said boom pairs are pairs we're likely going to be buying. That means we're likely expecting spike, and the spike is always shooting upwards. When it gets a zone where it's going to be trigger, it shoots upwards, and that is just how the nature of the market looks like. Then the thing we have to know, the thing we have to note, the thing we have to note, the thing we have to note here, the thing we actually have to note here with this pair is that the difference between the boom 500 and the boom 1000 is the frequency at which the spikes come out. If the frequency at which it spikes, for example, if 500 uses every 10 minutes, for example, is an example, every 10 minutes to give you a spike, that means this is times two of what this is doing, because this is 500, this is 1000. So this will be taking longer time. The 1000 will be taking a longer time than the what? Than the 500. If this uses 10 minutes, that means the 1000 will be using 20 minutes before it gives you a particular type of spike. So the way the programming of this pair works is that it doesn't spike continuously. You are going to have drop one, two, that is in second, 3, 4 seconds, 5 seconds, like this. It will be moving like this until it comes to hit a zone where it needs to be react, where it needs a zone where it needs to be triggered. When it hits a zone where there is a support, then you are going to get a spike moving like this, and that is how it works. Then when it comes here again, it might tick again in seconds, and then remember this thing works with minutes and seconds. It doesn't just work like an ordinary market. So wherever the thing lands, if you open your chart, it will tell you an average of 500 tick, or sorry, yeah, let's check. Let's open here. That will tell you. They'll tell you the when. All right, let's go to boom 500. Click on chart. So I'm going to close this app so that it opens properly the way I'm supposed to see it. Oh, sorry, I didn't share my screen. All right, so I'm going to reopen the app. I'm going to reopen the app. All right, so this is boom 500. So how do I look for the assets? I came over to my MT5, click on quotes, then search around here. If I can't find the pairs here, I'm going to click the plus symbol here and go to volatility indices, and I will tap on it to add those pairs on the list. So anyone I want, I will just tap on it. If I want to add one pair here, I'll just tap on jump index, and I have them under these categories. So now if I want to trade on boom 1000, this is it. I will click on chart. So you can see that boom 1000, the range of when you are expecting an average spike, it tells you, it's telling you 1000 ticks. You can see it here. You say on average one spike. This is one spike. This is a spike. Boom, you see it. It jumps. That is how it moves. It doesn't move like normal market that buys and moves up. So it moves in form of spiking, shooting up. So it's telling you that on an average, one spike occurs in the price series every 1,000 ticks. That is for the pair that the 1,000 pair. Then for the 500 pair, its own will be 500 tick. So I will switch this to 1 minute. Let me show you something. This is what I told you. 1 second, 2 seconds, 3 seconds, 5 seconds. It moves like it's moving like this. And then when it hits a support or at a particular minute or seconds, then it's going to shoot upwards. And suppose it's coming, and I know I am expecting a spike here. What do? I open a buy here. And when you open a buy, make sure the buy is accurate. For example, if I open a buy at that zone, let me use minimum lot size 0.20. I want to show you something. For example, if I open a buy, I have to be sure, okay, it has spiked. So you can see I'm in profit. So I caught it. I caught the spike. I caught it. You can see it. So if I open the spike, if I open the buy and it doesn't spike, then what will happen? I will be in minus. I'll be on minus. So when you are detecting the spike, you make sure you place it where you are going to catch the spike. That's just it. So you place it where you're going to catch the spike. So we can see that is just a practical for you. So if I move to, okay, let me show you something. You can see that tick. That is one tick. Good. If this one drops, it's going to give me another tick. If I don't get spike, that is how the profit will be reducing. Good. This is 1 second. Just 1 second there. So okay, this is 1, 2, this is 1 second, 2 second, 3 second, 4 second, 5 seconds. I had, sorry. Um yeah, 1 second, 2 second, 3 second, 4 second, 5 seconds. I had a spike. Really, it's not even seconds. This is 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes. I had a spike in 5 minutes time. So this is 1 minute that I've already elapsed. Is ticking. The next running here is what? Another 1 minute that is, once it completes the circle of 60 seconds, it will still be ticking. And if I don't get spike and it gets to where this blue line is, where I place the buy in between this spike here, I'm going to be out of profit. So but I want to show you something, what is happening there whenever I'm seeing those red. All right, so you can see that's red. If I don't get spike, that is how the profit will be going down. It's like something that is rising and something that is falling. You can see it. If it gets to where I open that buy and no spike, what will happen? I'm going to be out of profit. All right, guys, that is just what it is. So this is boom 1,000. So okay, I got another spike, higher one. So I'm at the zone where there are more spikes. So that's just it. So let's see how it looks like. So you can see how that's, you can see how you my heart spiked, two long candles shooting upwards. So that is how the market looks like. Then we're going to look at the other pair right now. looking at this practical, I just have to show you how to trade the market. I just have to show you how to trade the market. I just have to show you how to trade the market. Excuse me. So I just have to show you how to trade the market. So back to my screen. Okay, the next pair we have is we have crash. We have crash 500 and we have crash 1000. Crash 500 and crash 1000. So what is this? If Boom told us that an average spike could take 500 tick, or what did he tell us? Let's go back to the pair. It told us that an average spike occurs in the price series every 1000 ticks. So let us get the one for crash. How many does it take? So this is crash 500. So that means crash on an average, it takes what? A series of every 500 ticks. So that has to do with seconds and minutes. So, but what we're looking at the moment, let me close out of here. Let's go back to our screen. So this is crash 500. So this will take an average of 500 tick. So the way crash moves, crash is always selling. Remember, boom is always buying. So boom market is supposed to be moving upwards and crash market is supposed to be moving downwards. This is how it moves. So, but the only time we buy crash is when we see that the market is at the support level where it can no longer sell. Normal market that doesn't sell at support. It has to experience a change in cycle of a buy phase. So, but the next thing I want to tell you here now is crash is always moving downwards. The only time it moves upward is when it hits a support zone. Then we take that advantage to place a buy. We take the advantage to place a buy. Then the next is crash 1000. The same thing I taught you. I told you in terms of lot size, this is times two of what happens. Now, the rate at which this is going to give you a crash, like for it to release crash one time like this occurs longer, it takes longer time than this. This one occur more frequently, every almost on an average of 500 tick. This occur on an average of 1000 tick. So without further ado, I want us to jump straight to this to the practical aspect. I want to show you two things. Now, this is a basic concept. If this is crash market, anytime we're trading crash 500 or crash 1000, anything, take it, whether crash 500 or crash 1000, anytime the market is at the upper zone of our chart, we don't take a buy. We look for sell opportunity. Normal principle of trading. Now, anytime we are trading boom pairs, anytime we're trading boom and we find out that the market is at the support level or the bottom level of our time frame or of our chart, we don't sell again. We look for a buy because the market is going to spike, it's going to move upwards. So that's just the principle. Now, I'm going to give us some little process in which we can use to trade this market, how it works. So, without further ado, you are going to practice this on your demo account. Then, in the advanced video, that is where I'm going to teach you more other things that you are going to trade this with more accuracy, because if I come here and place a buy wrongly and the market does not spike, I will be out of profit. If I come here and place a sell, this is not like the normal market where you are expecting, you are seeing red candle showing you and you open sell. You are not going to see it. You are only going to know that okay, this is likely a zone where the market is supposed to sell, something like that. So if I place sell here for crash and it doesn't crash downward, it doesn't sell downward, I will be out of profit. I will be having red on my account. The same thing if I buy wrongly and I don't get spike coming in to put me in profit, I will be out of I will be out of profit. I will be having red until I get the spike to meet wherever my position is, my entry is. All right. So let's look at let's go straight to the chart. So on your MT5, I will use MT5 and also use trading view for us to get something. This is my MT5 here. Now, this is 1 minute time frame, but we will not use 1 minute to trade this. Just always use something like 30 to 15 minutes so you achieve more of accuracy. So what you are going to do here, you are going to click on the F symbol to trade this market very well. Start practicing it, how to catch spike. You practice how to catch spike and how to sell crash. Crash is selling, boom is buying. So what you're going to do here for this video, you are going to click the plus symbol. When you click the plus symbol, go to main chart. Under main chart, click on relative strength index. Sorry, we call it RSI. Now leave it at default, or you can leave it. Let's set this to, we'll set this to 7 for the meantime. Let it be. So this is it. So what are we seeing here? Anytime we have the market dropping, we'll use these parameters as our meter. Anytime the market is below level 30 and 0, we will be expecting to open a buy on boom. We'll be expecting to open a buy. You can see it's there. It's practical. You can see that at this zone here, when the market was at this level here, what do we have? This was a support level, so we had spike. The same thing when the market, I'm using 30 minutes time frame, don't forget. So you can use your own 15 minutes or 30 minutes. So when the market also hits this zone again, between 30 and 0, we had a spike. When it came again, between what 30 and 0, we had spike. So that is how it is. So you will be following this. So how do we sell? Whenever the market is around this upper zone between 170, we don't place a buy again. We look for sell opportunity because you can see that is why the market is selling. So you can see that this is what is happening. But the good time for us to buy exactly is when we see that the indicator is showing us. But I'm going to show you other advanced method and professional way, because this is not 100% strategy I'm teaching you. I'm only teaching you that you are going to get yourself engaged and be doing your practice. Go to this place, add this indicator, click the F button, make sure you click on main chart, look for that indicator, and also look for this particular indicator. You saw where I typed the period, I changed it from the default from 14 to 7. So reducing the number is how I want it to react faster. So with this, and I'm using what time frame, you can use 1 hour. 1 hour is more accurate. So what do you do? Anytime you see that the market is lingering, is drawing, is crawling around, this indicator is crawling between this line and here, you'll be looking for a buy opportunity. So you just place a buy and leave it there. and come back in some couple of hours. Normally, you are going to use 0.20 to be testing this, because if you use bigger lot size, if it doesn't spike, that is going to be a loss game for you. So you just have to be careful. So the next thing here we're watching at, anytime the market, anytime our indicator begins to come down to level 30 and 0, we see we're getting spikes. Anytime we come in here, we're getting spikes. Anytime we come in here, some people use 1 minute, but I don't want to teach you the 1 minute strategy, because it will, you have to be staying, you have to be looking at the market consistently to know whenever this RSI move from this zone to here. So you place a buy. And most times it's not always accurate, because it will be giving you false signal. So the best time frame is 1 hour, 30 minutes. Any of those ones. I've shown you how to use this RSI. Anytime you see it for the boom pair, you see it crawling here, touching this line, 30 and 0. Sometimes it might push downward, but anytime you see it out of here, just open a buy and be waiting for it. So you can see that. You can see it. How do we know it's correct? Screw back to what happened previously. You will see that anytime the market gets touching here, we are always getting spikes. Look at it. Though this one was a sell, it took some time. You can see around here, it took some time. That's why I told you that I'm going to teach you more professional, advanced approach to how you can cash this, so you can see what is happening here. So that is how you use it. So I will teach you how to set this indicator. The other indicator up there is also, we call it the stock indicator. How did I do that? I will delete it. To add the next indicator, come to this section, click the F symbol, go to main chart, click on stochastic indicator. Where is it? S, letter X. Look at it. Now type the period. Your own will always be at on a default value. So type yours to 80. Adjust the D section to 1. Put 1 here. Under the slowing, let it be under 4. Then under this boldness, set it, it's always under 2. Make it to be 4. So it can be conspicuous. So when you set it, you can see this. This has come under my chart. So what are we doing? We will be aligning the RSI with what the stock is doing on the 1 hour. Anytime we see that the stock is right at this zone and at this level, RSI is showing us the same thing, we will be taking a buy. We'll be looking to cash spike. So like here, stock was still at this zone, so it's likely it was a strong trend. That is why you see it pushing upward. So but when the market is crawling at level 80, and level 80 you can see it's the RSI, we don't buy again, we look for sell. That is when we sell boom. Remember I told you we buy it at the support level. So this is support level here. That's what we do. You can see it. The sell was really a strong sell. So you can see the stock took time. It was crawling under the level 20. The same thing with RSI until we had the trend change here. So you can see we had the market moving to that direction. Please practice it. I've told you how the rules applies. When you are at 80, when you have this guy crawling at 80, like this is touching 80, you look for sell opportunity. And let us make this RSI the same way. Come to your pixel, make it more bolder so you can see it. So you can see the line is thicker than what it was. So that's what you're going to do. This is for now. Use this indicator for practice until we get to the advanced part of this video. So how do we sell? Okay, if you want to sell this pair, you only sell it when you confirm that the market, the indicator is crawling at level 80, and also you are seeing the RSI showing you the same thing at the upper zone. But whenever we are at the bottom here, we don't sell. We look for buy opportunity. That's what I'm talking about. So so that is how we do the trading. So let us look for the other pair. How do we trade crash? So the same thing. Crash is the opposite, or let's open crash 1000. Anything is still the same thing. Good. Now, whenever we find crash 1000, remember crash is to sell, because when you watch here, you are always seeing, instead of green, you are seeing red, because that is how the pair is. The pair is always moving downwards. But whenever the pair is at this level of our indicator, we don't sell again, we buy. So for this one, we will always focus how to trade crash. We'll always focus on our indicator robbing level 80, and we're also confirming this with our RSI. You can see it anytime it's at this level, it is always giving us a sell. So I will make this more practical by using 1 minute, so you see how crash looks like. You can see it. You don't want to have a trade, a buy here, and you just see a drop of this kind of something like this. It's going to shake. It's going to make your heart skip. So that is it. You want to avoid this kind of long something crashing downward to meet you wherever you are. So how you are going to do this is simply using this indicator. Anytime the indicator is lagging around, is scrolling around level 180 at the upper zone of your indicator section, I gave you these two indicators so that this can help you for more confirmation. Anytime you see this, don't close your buy. We will buy here when the price is settling here, just like boom. I told you when we will sell boom. Now, get the point. Now I will open a sell because I believe this is at level 70, and I'm seeing a sell here coming out. So get the point. If we sell, crash, we still make money. If we buy crash, we still make money. It's like forex. You can see this. My profit is dropping from $2. When I open the buy, the profit is dropping. And if I leave it there and the market does not spike again, I will be out of profit. So that is just it. Now I have opened a sell on crash 1000, hoping from my indicator reading it is at level 80 and level what? Level 100 and level 70. So I will leave it there. Since it's on the minimum lot, I will leave it there. At the right time, I'm going to get crash coming my way. So that's just it. So the next thing we are seeing here is that the same thing in market, forex market. If you buy, you make money. If you sell, you make money. That is how basically crash and boom works. If you buy crash, you still make money. If you sell it, you still make money. But make sure you're buying at the right position. You're buying where the market is support, at the support level. You're selling at the level where the market is at the resistance. So don't ever buy crash at resistance. You're going to regret. You're going to regret it. So don't ever trade crash when the thing is where it's going to be at the reactive zone. Don't ever trade it there, because you're going to regret it. So anytime we see that crash is at the support level, we don't sell again. We look for buy opportunity. You can see when it's crawling here. Very good indicator I have given to you to practice. Make sure you practice it, and then in my advanced video, I'm not going to be using indicator. I'm not going to be using indicator. I'll be using something more different, a more different approach. So let's go back and see what is happening to the trade. I notice since okay, let me see what is happening this to this trade. Good, we are back on $2 profit. That means the market is at a buying stage. Okay. These are indicator. Well, there is some dichotomy here. RSI is showing us level 30, and stock is still at the middle of the road. Our stock has not. Our stock indicator. Our stock indicator is not yet at this level to give us a strong valid buy, but this is giving us a buy here, and that is why we are having spike. But I think if we allow this stock settle here, and this is also at the level, the support zone, where do I show you that? All right. So it's more likely the trend is strong. That is why we're getting this. So, but normally, this is a very good confirmation. When we get this kind of positioning, stock is at everything is lying at level 20, and this is at level 20. This is a very good buy opportunity. Yes, this is only at level 30, and between 30 and 0 it's still a buy, but you can see consolidation. The market was ranging here up and down, but you can see that when this stock, the more it gets downward here, the more you're getting what you're getting a stronger buy. So that is how you're going to do. So practice it. You saw that I opened that buy because I discovered that on the okay, let's drop the time frame. Okay, let me see 15 minutes. Okay, good. On the 15 minutes, the stock is at level 20, right? At level 20. So lower time frame are also going to give you faster um, faster buy, or faster yeah, it's going to give you more fast signals and more fast entries. But the thing is, most time it will always pick it can catch also fake signals, a lot of fake signals. So that's just it. So okay guys, I think that is just that. That's that's the beginner version for this. So just practice it. Anytime you find your RSI and this the same position, you buy for boom. Even if it is crash, you buy. Then if it is at the resistance, you sell. The same thing for boom. So that's just it. At the moment, I think I just want to show you the other part of it. So let's switch to trading view. So you can see how long this spike is because of boom 500. You can see because it's at a support level. So how do we do this? We set our indicator. If you're using PC, just click on indicator and click on RSI. Sorry, I added this thing twice. So I'm going to make the settings the same settings we did there. I'm going to change this to 7 and click OK. So this is 1 minute time frame. We are not using that. Let's use something good between 15 and now, if you are a scalper, that's what we call scalper. People who want to trade more frequently. You are more likely going to be using what 15 minutes. But For more accuracy, is good you leave your time frame. Always use the 1 hour to the 4 hour time frame. That's going to give you more accurate um, signals and entry. We can see that anytime we are at the level 30 and 20, we look for buy opportunity. The same thing here. All these are what I have shown you on the app, MT4 or MT5 app. So please practice this, and that is that. Okay, thank you guys. You can comment or like, and also please do click the subscribe button, and I promise you I'll be dropping more content that will be helpful to you. I remember myself, FX Kabi the trader. So we're here to impact and change life. So I believe this intro video will help you in a very long way, to go a long way. Just ensure you take practice more on your demo account. These indicators, or this indicator I have shown you, will help you understand the market very well. Make sure you turn them on and try to use them until you're beginning to get the concept of how the whole game works. Okay, guys, until um, I bring out the advanced video. Thank you for watching. Bye.